Testing, testing. Testing, testing. Okay, good. All right. Do we have any people here yet? Hello, Michelle. You guys are early today. I'm really early. If you guys see me looking around, I've got 4 screens. I've got one here, one here, one here, and one here. I've got 4 27-inch screens. It makes it nice when you're trying to get stuff done. And then obviously my camera is right there. Oh, oh. What's up, Ram? Remington. I'm gonna come say hi. Hi, buddy. Mm-hmm. Oh. You do not type well, buddy. You do not type very well. That's my boy. His name is Remington. What you doing? That's a good boy. Let's see. So I've got looks like 13 watching. I see Michelle and Penny. Hello. Motor's going today. Are you serious, Penny, or are you just saying that? Hi, Rim. Hello, Tiffany. Well, I would have believed you. I actually know people who have dogs, and one of them is named, they have two dogs. One's named Smith and the other one is Wesson. No, that's not a joke. I named him, actually, I was, a friend of mine suggested that I name Remington, and that's how he got his name. That wasn't my idea, but I do love it. And my back is, I have good days and bad days. Today's a mediocre day. I'm okay. I started physical therapy, and it's just a little slow going. They the type of procedure that I did, they don't want me lifting any weight for like 2 months. Like, I'm not even supposed to wait. I'm not even supposed to lift like 10 pounds. It's insane. So, but oh, that's funny. That's cute. Crutch because he's got three legs. We have a I've always loved cats, so I have um I have like 6. With it, we have probably including neighborhood cats, not neighborhood cats, but just cats that that I've kind of adopted, that I take care of. And in the backyard, I think there's like another 5 or 6 of them. And I try to catch them and fix them. I don't like to kill them, but give them a little, give them a little food to fix them and give them good quality of life. And some of them come up and they they're affectionate, and then some aren't. Some are just terrified. But I always like to make sure that they're fed. Waiting on Alan here. He should be here any minute. Yeah, I've heard the name Colt before as well. A lot of interesting. I've got another total random friend who's he has a dog. He's calls Glock. So I know, and I've a friend of mine from New York. She has a dog. Her name. I don't remember him or her, whatever. The dog's name is Ruger. So. Hmm. I guess naming your dog yeah, a cat named Biden. I don't think I could do that to a cat. That'd be horrible. Well, I can't help it. I'm a softie. I will, if it's not a black widow or a poisonous spider, I'll actually try to save the spider, take him outside. It's like, go outside, live. I don't like to kill things. If they don't need to be killed. Anyway, I guess that's probably a better way to say it. I don't like to kill just for the sake of killing. I have no qualms doing it to a fly or a mosquito or a cockroach, but I don't know. Spiders actually catch flies and stuff. Let's see. Still waiting on Alan. A little surprised. I thought he'd be here by now. Have you guys looked at all into devolution? Everybody here looked into devolution? I printed it off. All 13 printed it off. And I printed off you can see this. I'm gonna come through. Oof, there we go. I don't know why it does that. It's freaking huge. It's the Law of War manual. The Law of War manual, and looking at there's a guy who goes by the name Magic Eyes Only, MAJICEYES, and then the O is spelled the O is actually QNLY, Magic Eyes Only. He's on Rumble and BitChute, and he's done a lot of work into the Law of War manual and how the drops he talks about how the drops, when you understand the drops are red from they're not pointing to dates like 11.3 and 11.6 and a lot of the a lot of the 11s. He talks about how when you overlay them with the law of war and the U.S. code, it completely gives a brand new vision as to what the drops were. Reading them is quite illuminating, actually. I'm very fascinated by it. How many of you guys are interested in, oh, here we go. Here's Alan. I was going to say crypto. Alan, are you there?
I'm here.
Okay.
Get rid of that. How you doing?
I'm hanging in there. How are you? I'm having a little bit of a difficult day.
Oh, I'm sorry to hear that. What's going on?
Okay.
What's going on? Just feeling?
No, well, I'm just my when some days, depending on the day, some days are good, some days are bad with the inflammation in the back. So
Oh, that sucks.
yeah, so it's difficult to sit.
Yeah.
Yes, Magic is extremely proficient in decoding.
All right. So we're going to do mainly module 16. I'm going to touch on 18 and 17, and then we'll get into 16. By the way, my website is back working, feded.us. So if anybody wants to go on, they can.
Excellent. Penny, if you guys are interested, I would even entertain doing like a one-time live for anybody who has any interest on that topic, especially if some of you guys just want to have a thing where just want to ask some questions because you don't really know. I can point you in some direction. So I talked to Doug last night.
Yeah.
And I corrected him. Well, actually, yesterday afternoon after I spoke to you.
Right.
So he's like, "Oh, that means it's a good thing." He says he can spend a little extra time
Doing other stuff.
Yeah, and Gloria, what I just said was referred to Michelle as well. Any of you guys are interested in that? In fact, here I'm going to put my email address in the little chat here. Email me. What I'll do is I'll probably set up like a private thing so we can just do it. And it's just like it could be like one-on-one, a little bit more cozy setting where if you guys have questions, what I can probably do a Zoom or something like that.
Did you want to share screen on the journal entries?
What are the journal entries?
They're the pages 3 and 4 in module 16.
I think I can.
Okay. If you want. Might help people follow along, but it's up to you.
I gotta get them first.
Okay. Yeah, if you just pull up module 16.
I was listening to there's a guy that I have followed quite closely for a while, and his name is Jim Willie, and he's a big like finance guy.
Okay.
And anyway, long story short is he's been talking about M1 and M2 money, and because I've subscribed to his newsletter. And he was talking about M2 money, and I'm like, oh, I know what M2 money is now.
Well, and just so you know, to me, the definition of M1 has not changed. It's still spendable on demand in country in
Mhm.
the four pieces. But back in May or June of 2020, the powers that be decided to include two new things in the M1 number: savings and money market. Round numbers, that jacked M1 money from like 4 trillion to 16 trillion. They didn't change the definition, they just changed what they included. And I believe one of the reasons, or the primary reason behind this, is that if the powers that be were actually able to get us out of being or take us into a cashless society, and all cash and coin in country are gone, you would see the M1 number drop very little.
Hmm.
So the idea would be, see, there was hardly anything in M1. What you wouldn't know is that M1 dropped in half. So in fact, I don't even know if they report M1 the way they used to anymore. But it's really important to understand how, and there's other people and other entities pushing central bank digital currencies where you'd still have banks, but the sole creator of money would not be the people, would not be the banks, it would be the central bank. Gee, do you think that would be a problem for us?
No.
All of our money, all of our monetary wealth is now electronic digits in now the Fed, in the central bank's computer, and you say the wrong thing, you think you get canceled on some social media, you're getting canceled at the bank level.
Hmm.
So it's just, the thing is, their solution doesn't solve the problem or problems, and the problems are inflation, federal taxation, and federal debt. So, but we'll get into how, when we get to 16, we'll because we're
I've got the screen. I've got the screen shared.
I see it. That's very good. I can't scroll through it, but I can tell you to scroll, right?
Well, here, I think I can actually. Yeah, I'll scroll through.
Okay.
I'll just scroll through as you need
Yeah.
me to.
All right, you can leave 16 up.
Okay.
The first, we won't stay there long, but and going to ignore it for the moment because I'm going to start with 18 and 17.
You want me to go down you want me to go down to 18 instead of 17 and 18?
If you want to go to 8, if you can go to 18, yeah, and I'll just so they can see it. Yeah, just the first page of 18.
Okay.
And then I'll talk briefly about 18.
Okay. I'll make it visible for everybody.
Great.
So as you guys know, we didn't even do an introduction on this. This is the third and final installment on Alan Meyer's Fed Ed class. So this is basically, we've been understanding how the Federal Reserve operates, some of the little things behind the scenes that most of us are not taught at all, and how evil and sinister it is, and what it's been doing, and how it's enslaving us, and just a lot of really interesting stuff. So all that said, next week we are going to start back up on the Constitution, going through the preamble. I believe he starts with the preamble, but next week is the beginning of going through the Constitution again. So that'll be a week from
with
today.
whom? With whom?
With Mr. Douglas V. Gibbs, Mr. Constitution himself.
Yeah.
So that'll be a lot of fun. But for today, we're going to finish up with Alan here. And Alan, I'm just going to let you kind of take the lead here. I'll as you need me to scroll, let me know.
Okay. Well, thank you very much. Great to be here again. Hello, everyone. This is the third and final section on Fed Ed. Fed Ed is about the Federal Reserve System, of course, and about banking. If you see me, I am turned a little weird. It's because I'm trying to amuse my cat at the same time so she doesn't walk through the screen. We're going to spend most of today on module 16, but I'll I'll talk briefly about module 18 and 17. Module 18 is basically, in one of the pages, there's 3 pages to module 18. Module 18 is what I call quotes and notes. Quotes that I've picked up over time and some of my notes and some of my thoughts. So Ron, you can scroll now to the first page of module 17. Keep going. Yeah.
Oh, I didn't realize that was.
Yeah, keep going. Okay, module 17 right there. Module 17, if you just scroll down a bit, you're going to see the word now. This is in reference to the question, scroll up a bit. When do you execute the call to action? When do we begin? Now. I chose 3 quotes for this module. Usually I only have 1 quote, but I'm going to read these because I think they're very impactful and part of what we need to do. It is well that the people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. Henry Ford. Gee, did he know anything about money? I think so. Never doubt that a small group of thoughtful, committed citizens can change the world. Indeed, it is the only thing that ever has. Margaret Mead, 1964. If you're wondering if you make a difference, according to Margaret Mead, you do. And finally, one of my favorites from the great one, Yoda, do or don't do. There's no trying. We must do. And just briefly, Ron, scroll to the next page down, and you'll see that in FedEd, there's a draft email that you can send to your elected employees in DC. Thank you for that.
You're welcome.
Now we'll go back. Oh, let me see what else. Before we get into module 16, you can scroll up to module 16. There's a couple things I want to read.
I'm letting them, I'm just scrolling through the entire letter so that if they want to read it, come back.
Yeah,
and
go ahead.
Come back later, they can.
Yeah. And remember that fortunately, my website, FedEd, FEDED.us, is now operational again. Check it out. To add to why what I'm going to talk about today is so important is to go back into time and to listen to words of very well-informed people. For example, and this is a quote from module 12 from Milton Friedman, a Nobel Prize winning economist. He said the Federal Reserve definitely caused the Great Depression by contracting the amount of currency in circulation by 1/3 from 1929 to 1933. I've asked physicians about taking 1/3 of a human's blood supply out of their body, what would happen? They look at me like I'm nuts. I go, well, you're going to be dead. Well, that's kind of what happened to us. So the Great Depression wasn't an accident. The Great Depression was deliberate, definite. And imagine you knew somebody who was running a really big corporation, big business, and they so messed everything up, the business almost went BK or went out of business. They have a job the next day, Ron?
Nope.
But is the Fed still there?
Yep.
Yeah, therein lies the problem. So somebody might say, Alan, come on, that's not what Milton said. Okay. Now let's jump to, this is an event commemorating the 90th birthday of Milton Friedman, somewhere around 2002. And at this event, Ben Bernanke, then a governor of the board, on the board of governors of the Federal Reserve System, gave a very long, boring presentation. And in his opening, he said, I can think of no greater honor than being invited to speak on the occasion of Milton Friedman's 90th birthday. Among economic scholars, Friedman has no peer. So that's saying, that's pretty good. Well, Milton and another PhD, Anna Schwartz, wrote a book called A Monetary History of the United States, 1863 to 1960. It was published in 1963. So when Milton closes out his presentation. One short little couple of sentences. He's referring to Milton Friedman and Anna Schwartz. Let me end my talk by slightly abusing my status as an official representative of the Federal Reserve. I'd like to say to Milton and Anna, Milton Friedman, Anna Schwartz, regarding the Great Depression, you're right, we did it. We're very sorry, but thanks to you, we won't do it again.
Now, Alan, I have a question for you. Was that not, was he saying that as an admission, or was he saying that as a tongue in cheek?
To me, it's an absolute admission.
Okay, because I remember hearing him say that. I've seen a clip of him saying it, and I think he was saying it like, well, the way that it sounded to me is that it was sounded like he was saying it as a joke. And but that being said, I do know that they hide humor in plain sight in terms of things that they really did. So,
given that he felt that being there and speaking, putting it in context, he is at an event commemorating the 90th birthday of Milton Friedman. He opens by saying this man has no economic scholar peer. He isn't going to end with a joke.
Okay. Well, you and I have different. You and I have different senses of humor, or styles of humor.
I am very sarcastic in nature, but this is a moment where he has spent 8-9 pages of text talking about Milton Friedman, and he closes by including not only Milton but Anna Schwartz.
Okay, well, I'm not trying to be combative. I'm just saying I've seen that clip.
Yeah,
and he said it in a laughing way, and the audience was laughing. So now I don't think the audience picked up on it, but I do believe there's merit to your argument. I will say that. I'm not suggesting that it's not an admission. I'm just saying it was like I think he was trying to couch it in such a way that it was an admission as a funny way to do it, but nevertheless it's still an admission.
Funny or not, it's an admission, and it's acknowledging what the two had already said. So right. I leave it at that.
Yeah.
So now we get to module 16. Module 16 is 4 pages. It opens with a quote. I think this is very appropriate to this month. In a time of universal deceit, telling the truth is a revolutionary act. George Orwell. Well, we have some universal deceit going on. It's this monetary system. I may have mentioned earlier that, and this has to do with the front cover of FedEd. It has this creature, it's called a Hydra. The Hydra is a mythological creature, multiple heads sitting on multiple necks. And the mythology tells us that if you cut off one head, 2 will grow back. I think this is a wonderful metaphor for today, in that the heads are all the problems that we face, and every one of them is serious, potentially deadly, and they're after you. And if you focus solely on one head, you may not see the other ones coming for you, but you'll never defeat the Hydra, the source of these problems, by taking a head, by dealing just with one problem. There's only one way to defeat the Hydra. You have to take its sole source of power, its heart. And the easiest way to take the heart of the Hydra is to take its heartbeats. And I'm going to show you 4 heartbeats of the Hydra today. These are journal entries from banking. We've talked about the quote. Let's scroll down to the next page, please. Thank you, Ron.
Where do you want the beginning of the top of the next page on the basic bookkeeping?
Yeah, keep going. Okay, that's good right there. Thanks. For those who don't have a background in bookkeeping, this is kind of a summary of the general classifications in a balance sheet and an income statement. The balance sheet has three areas: assets, liabilities, equity. The income statement has three general areas: income, cost of goods sold, and expenses. Forget the account numbers for right now. The next column is account class. The assets is DBA, debit-based account. Liabilities, equity, income, CBA, credit-based account. And cost of goods sold and expenses are debit-based, which means if you look at the debit and credit effect columns, you'll see that for an asset, when that account is debited, the balance will increase. And if you put a credit entry into an asset account, it would decrease, and you can see the rest. This is just absolute basic bookkeeping. Now, the journal entries I'm going to discuss today are what I call intra-bank, meaning within the bank. If I included journal entries of activity between one or more, or two or more banks, we'd have more journal entries, but the net effect would be the same. That's why it's simpler to make them intra-bank. So let's go to the first journal entry, please. Thanks, Ron.
Sorry.
Just
I'm going through the notes. Where do you want me to go?
Just scroll to the next page.
A commercial.
Oh, I'm sorry. Do me a favor. Scroll back up one just a little bit. Keep going. Right there. Right there.
Okay.
Now, in bookkeeping, every account in a general ledger would be the ledger. And back in the day, this was paper and binders. Every account would have its own page or pages. And there's a thing called the T account because it's shaped like a T. Debits are always on the left. Credits are always on the right. DR is the abbreviation for debit, and CR is the abbreviation for credit. That's the way it would be laid out in a ledger sheet for every account. Assets are always first, then liabilities, then equity, then income, cost of goods sold, expenses. The net of income less cost of goods sold less expenses is net income or loss, and that is an amount that's added into the equity section, and that's why the balance sheet balances. All right, now we can scroll down to journal entry 1, and I'll explain it. What you have here is you have the journal entry, which is the description, the debit, and the credit. Everything to write to the debit and credit you would not find in a normal journal entry, but it's my way of describing what else is going on. And then below is the analysis and conclusion that you can read about this journal entry. This journal entry is about money creation. And when I'm talking about money now, I'm talking about M1. M1 is that money which is in country, that's in circulation, which is all the cash and coin in your pocket and my pocket, in our businesses, all the way up to state governments, not what banks hold, not what governments hold, not what the Fed holds. It also includes all the electronic digits in checking accounts and traveler's checks issued by non-banks. Traveler's checks issued by non-banks is almost nothing, so we just deal with the three: cash and coin, electronic digits, and checking accounts or demand deposit accounts. Let me describe this journal entry. Now, I use very simple numbers just to make it easy and not take up a lot of space. This is the bank, and it happens to be the Bank of Allen, making a loan to a borrower named Smith. Now, when I make this loan, because I am the Bank of Allen, the journal entry I'm going to post into my general ledger is a debit to the asset loan receivable Smith. That increases that asset account, loan receivable. The offsetting and equal credit. For every journal entry posted into a general ledger, the total dollar amount of debits must equal the total dollar amount of credits. You could have one debit entry and two credit entries, vice versa, it doesn't matter. It's just the total dollar amounts, dollars and cents, must equal. That's why it always balances. The offsetting credit is to this checking account, which on my books is considered a liability. 1,000 credit to a liability increases it. So I've increased the loan the asset. I've increased a liability. I hit enter. What makes this money creation, which you can see on the far end, M1ED, is that the checking account is considered part of the M1 money supply. I, the Bank of Allen, just increased the M1 money supply. This is how money, M1 money supply, is created, increased. So when I say created, I mean increased. When I say extinguished, I mean decrease. Now this money sitting in the bank account, the checking account of Smith, didn't come from another account. It came from me putting in a journal entry and hitting enter. Now somebody might say, no, that's not the way it goes. Okay, fair enough. Let's have a look, shall we? There's an article, got to put my glasses on. There's an article or a bulletin, quarterly bulletin from 2014 Q1. The article is called Money Creation in the Modern Economy. It's written by 3 authors, and they come from the Bank of England's Monetary Analysis Directorate. Okay, that's a heck of an acronym, MAD. It's about 12 pages. And what's interesting about this is that, I'll read the opening overview. In the modern economy, most money takes the form of bank deposits. They use the word deposits in England. But how the bank deposits are created is often misunderstood. The principal way is through commercial banks making loans, which is what I just described. Whenever a bank makes a loan, it simultaneously creates a matching deposit in the borrower's bank account, thereby creating new money. We'll come back to this article in a little bit. So there's the Bank of England, I believe, supporting what I just said. Banks create money. They increase the M1 money supply. We call it money. They call it deposits in England by posting journal entries. And the thought is that this happens when banks fund loans, and that is correct. Any questions?
I don't have any. I'm kind of a deer in the headlights at this moment, but
okay. So do you feel you understand what I said?
Yeah, but don't ask me to, don't tell me you're going to test me on it at the end of the class.
No, that would, see, if I told you that, the surprise would be gone. So no, no quiz.
No quiz, okay.
But I think what I want people to take away from this is that this is how the M1 money supply is increased. Now, we've talked about this before in the earlier modules. None of this has to do with printing, the printing press. And this doesn't come from the Fed. This doesn't come from the US Treasury. This comes from banks. This is where the power is. Yes, I talk about the Fed. Yes, the pamphlet is called Fed Ed, but the Fed in our system, to me, is more the front player. It's not where the power is. The power is wherever money can, or whomever can create and extinguish money. And this is how it happens. Banks are creating our money supply, not the printing press, not the US Treasury, not the Fed. Hope that helps.
Okay, I get that.
All right, now let's go to module 2. I mean, not module 2, next page. Or excuse me, I'm sorry, I don't have it in front of me. Just scroll down to the next journal entry 2. There you go. Okay, this is interesting. People talk about money being created. They talk about it being printed on. And as journal entry 1 just showed, it's not printed. It comes into existence because somebody can work a keyboard and hit enter and post it into a bank's accounting system. Well, it's time for Smith to make a loan payment to me. And that payment is going to come out of the checking account that the money went into. So here, this is 3 lines. You've got 1 debit, 2 credits. Once again, just simple numbers. Smith owes me, the Bank of Allen, 110. So to get that 110, I debit or reduce his checking account by 110. In the beginning of a loan, most of a payment is interest, not principal. So I just once again used round numbers. Of the 110, 10 is reducing the note receivable, the loan receivable, and 100 goes to my interest income. The debit to the bank account reduces the bank account. The credit to loan receivable reduces the loan. That means the loan has gone down from 100 to now 90. And the interest income, 100, that's a credit to my Bank of England's interest income account. That's gone up 100. So think about this. The loan went from 100 to 90. But the amount of money that came out of that account was 110. Which meant if nothing else happened in that account, that 1,000 went down to 890. But now he owes me 990. Just saying. To give you an idea of what happens, I did the full spreadsheet analysis on this. Imagine a loan, $300,000, 5% interest, 30 years fully amortized, which means by the time the 30 years goes up, the whole thing's paid off. 5%. Nowadays, that's huge. Back in the day, that's kind of average. Well, in 15 and a half years, approximately 15 and a half years, between principal and interest, the borrower would have paid to the bank, round numbers, $300,000. The same amount that was borrowed in principal and interest in 15 and a half years. In the 14 and a half years left between principal and interest, the borrower would owe another $278,000.
Okay.
Okay.
I'm totally, and I think I can speak for the people in the chat. I'm totally just like, I'm along for the ride and I'm watching what you're saying, and very little of it is being retained. This is a lot of stuff, but what I think, Alan, it's easy for you because this is what you do for a living and have done for a long time.
Yeah.
But for those of us who don't really understand this, like myself, and I can't speak for everybody, but this is a little overwhelming for me. But I'm saying that to let everybody in the thing know, because I got somebody here says, I feel like a character in a Charlie Brown cartoon where the adults are going wah 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 wah. Well, I second that.
This is okay. I'll put it in, and I get this, because if this is new to someone, it might feel overwhelming or it lacks context, because this is not something that's already in your mind, because you didn't grow up with basic bookkeeping or you didn't grow up with this kind of basic education. But this is basic education, and it's easy for me to handle it when I found out about it, but only because I went and researched it. This was not anywhere in my college or post-college education.
Right.
So I recommend people get FedEd, and you can go and get it. The website's operational, and it may take a couple reads, but you'll get it. This ultimately is very basic information. This is something that really belongs in high school. Just like bookkeeping, you used to be able to get bookkeeping in high school. This belongs there too. So hopefully don't be intimidated or frightened or whatever, scared away by something that is not immediately recognizable because you don't have the background. This is something that pretty much everybody can understand and absorb. And most importantly, we need to, because these are the heartbeats of the Hydra. This is what we have to take back from banking and return to the control and benefit of the people. What this journal entry shows is that when a bank gets a payment, again, these are all intra-bank within the bank, it reduces the amount of money, M1 money, in somebody's checking account. And in this case, most of it goes to interest income. And interest income for the bank is not because they, in essence, have an account that increased. Like if your savings account goes up because of interest income, well, savings account balance is higher. The bank is reporting interest income because it extinguished more money in essence than it created by the loan. And that's how they make it balance. That's journal entry 2.
All right. So is there a third?
Yes, there is.
There. Well, hey, ask and you shall receive.
There's a third and a fourth. So before we get into third, I'm gonna have to read something in a minute. This is what really, when I figured this one out, this is what really just sent me over the top. Now, as we discussed in module 1, module 1 was money creation by funding a loan. And this has been agreed to by many sources, including what I read, which is the Bank of England. In that article, Money Creation in the Modern Economy. Well, in the conclusion of the same article, 2014 Q1, I was so stunned by what they said, because they actually basically admitted what I'd already come to understand. Let me read it and then we'll talk about it. And then we'll get to this journal entry. This article has discussed how money is created in the modern economy. So that's what we're talking about, money creation. It says most of the money in circulation is created not by the printing presses of the Bank of England. Well, no money is created by the printing presses of anybody, but they said it. But by commercial banks themselves. I agree. Now here's the kicker. Banks create money whenever they lend to someone in the economy. That's journal entry 1. They continue. And when they lend to someone in the economy or buy an asset from a consumer. Well, buying an asset from a consumer means somebody out in the marketplace, which means instead of debiting the asset loan receivable, they debit autos, they debit building, they debit office furniture. What this article from the Bank of England acknowledges is that banks create money basically whenever they increase the balance in a checking account, and it doesn't matter where the debit goes. So when people say banks only create money by funding loans, they're incorrect. If they say that banks create money when they do fund loans, that is correct. Now we look at journal entry 3. Here, the Bank of Allen, that's me, is making, I'm going to cough for a minute, excuse me. It's time to pay an employee, Smith. Now, as a really good bank, and I am a really good bank, I give all my employees free checking accounts. And of course, they take them. They like it, free checking account. Which means at the end of the day of payday, the only thing that the employee, in this case, Smith, cares about is that the bank balance in that checking account goes up. And for that balance to go up, requires a credit entry. In this case, it's $1,500. Where do I put the offsetting debit? I put it to wage expense, of course. Hit enter. Which means I, the Bank of Allen, satisfy all expenses by creating money, not spending it. Number one, that shows what power you have when you are the creator and extinguisher of money. This is why this power must be returned to the control and benefit of the people, not sitting in private banks. But the kicker is this. For corporate tax purposes, are banks treated as regular corporate taxpayers? The answer is yes. Do they file regular corporate income tax returns? Yes. Are they subject to all the rules and regulations of other businesses? Yes, except they have some special abilities in writing off bad debt. Which means every expense on a bank's corporate income tax return is there not because they spent money, It's because they created it. I'll leave it to you to think whether that's tax fraud or not. So for me, this shows why the power to create money, extinguish money, control the supply must be returned to the people. Must be. Because this is what you can do. You can fund asset purchases. You can fund expenses. So what happens when we take this power back away from banks? We leave banks alone. Other than that, we need banks. I'm not anti-bank people or anti-bank buildings. We need them. Good business. I just don't want them creating money. When they fund a loan, they loan out of their own hide. When the people, we the people, control this power, and I've spoken about this earlier, for lack of a better term, I will call it a national bank. What do we get to do? We can fund our federal government by doing what banks do when they fund their operation, create money, which means who really now controls the purse strings? We do. And since the federal government would only get funding from the national bank based on approved budgets that the people approve, they don't need to, and they don't get a tax anymore. The IRS goes away because it's not needed. They don't get to borrow anymore because they can only get funding from the national bank. The debt will get paid off. And the national bank will control the supply in such a way so we don't have inflation. This solution addresses the three main problems we have: inflation, taxation, and debt. This is what the heartbeats of the Hydra look like. The bookkeeping of banking. One last one, if you scroll down, which is 4. Here, Smith has a savings account. Ooh, too far. And if you go all the way down to the bottom of this page, you'll see all the notations, but there. Anyway, banks not only create M1 by increasing the balance in the checking account, they also create M2 by increasing the balance in the savings account. And what do they get to do when they add to somebody's savings account interest income? They get another tax deductible expense called interest expense. Banks don't spend money, they create it. And when you have the power to create money, you can acquire any asset, you can satisfy any expense, and you can fund any loan you want. This power must be returned to the people. These are the heartbeats of the Hydra. And given the current situation we have in our current monetary system, allegedly controlled by the Fed, but we all know that every Fed bank, all 12 of them, are owned by their member banks within the region, which is another way of saying the regulatees own the regulator. What has their system given us? Inflation, the need for federal taxation, and because we, the people, don't hold the purse strings to the federal government, we've allowed it to borrow to an absolutely unpayable level, now at 29 trillion. And I think, Ron, you might remember I've spoken about trillion, 1 trillion, and I put it in understandable units. If you were to live a trillion seconds, you'd live to be 31,709 years old. That ain't going to happen. That's 1 trillion, not 29. Mm-hmm. If you were to walk 1 trillion inches, you would walk a distance equal to 633 times around the earth at the equator. That ain't going to happen. And if you were to fly 1 trillion miles, you'd fly a distance equal to 107 round trips from Earth to Pluto and back. That's 1 trillion. Mm-hmm. Our debt is over 29. It is absolutely, in this system, unpayable. If the interest rate ever spikes up, it's going to be unserviceable. And who's going to take the big hit on this? Well, one of the big hits is going to be all the pension plans, public and private, that were told they had to invest in AAA rated bonds or investments because that way weren't going to be exposed to big risk. And most of them are seriously underfunded as of now. And that's not counting the treasury debt as bad. Not good. Not good at all. So those are the heartbeats of the Hydra. That is module 16.
Okay. And
So
that's basically it. That's what,
that's
was there anything else? I think you were talking about a course of action of things that people can do.
Well, that's module 17. Number one is to get Fed Ed, read it, study it. The call to action is, okay, this is this has been going on because the Fed went operational in 1914, November 1914, the opening of the Federal Reserve Bank of New York. This has been going on over 100 years. A lot of people, a lot of generations before us let this go down. Well, we're on the wall now. We're on the watch. And this is what's going down. The question is, are we going to stop this? Are we going to make the change? Are we going to demand the change? And the way you demand the change is, I use the term we, as we the people, we are the citizen owners, using the term, the style of the Constitution. That's capital C, capital O. People in DC, they're elected employees, lowercase c, lowercase e. We need to tell the elected employees as owners what to do. And we haven't been doing it. We've been asleep at the switch. We've allowed them to do what they do. We've allowed them to borrow to an unpayable level. And, up on the table are multi-trillion-dollar bills that of course will require more borrowing, and eventually, like any good Ponzi scheme, and I've talked about this before, why the national debt is a Ponzi scheme. Federal government has no for-profit business from which to repay this debt. This is a Ponzi scheme. And eventually, like every Ponzi scheme, you run out of lenders. We got to shut this down. You got to tell the elected employees who have not represented you very well in DC, make the change or don't come home. Don't come home means you won't be welcome back. And then you go after your local or your state elected employees and ask them, where do you stand on this? Do I need to get you fired? Because we'll all go down when this monetary system goes down. And the push, of course, will be even more centralization, whether it's centralization at a national level or, of course, the one world order thing. A lot of people are now pushing, it's called central bank digital currency. The central bank wants to control the creation, extinguishing of money. Banks will still be out there. They just won't create money anymore. It will be the central banks, which means you say the wrong thing to the wrong person, your account's done. And when you have fully digitized money, no physical money, you can be shut out of the system. Pretty darn easy. This is wrong. This is why we need physical and electronic money. It's now up to us. What are you going to do? So please get Fed Ed, read it, share it. And you can find me on the radio with Douglas V. Gibbs on Saturdays, 1 to 3 p.m., KMET 1490 AM. Easy to find us on the radio. That's West Coast time. And on, on Sundays, I'm on Patriot Soapbox, 5 to 7 p.m. West Coast time. And my program is called For the Republic, because that's what I'm about. I'm for the Republic.
Very nice.
And
total side note here. I have I think I was telling you about Jim Willie. He's a guy that I've had a lot of respect for. I've been following him for about probably 13, 14 years. He has a monthly newsletter that he puts out. And this is his new newsletter was released the other day. And this is what he talked about. I want to read this paragraph. Some people are confused about the two competing financial reset events. One of them that is spoke about is in the controlled press. The other is a libertarian work in the background for a universal fraud-free operation. Klaus Schwab and the Octagon and Davos Hive cites a reset which is planned to be basically the foundation for the new world order. It would feature the supposed gold Phoenix currency and centralized Basel power, all with the control offices and levers kept the same. Transparency would be nowhere. The White Hat Alliance reset would have a solid asset backing, but to a decentralized structure with numerous gold currencies on the global table. Since it will be on the quantum financial system with very likely the blockchain structure, the transparency would be universal. The globalist cabal will fight to the death to prevent the fair universal populist system to be installed. That's
okay.
It.
All right.
That's that. Well, I heard that was the best. It was the best, like short synopsis of hearing about the two different resets competing. Because I've long talked about two competing resets that are in play right now.
Well, the quote unquote one world, new world order reset, centralization of power would just be god awful, be ruinous. Just slap on the chains, hear them clank, and we're done.
Mm-hmm.
It's also about, to me, this new world order is about centralization of power, which means, well, we don't really have countries anymore. We just have areas. And I am absolutely not for that. And this is taking a national monetary system global, which means you have absolutely no input or control into your monetary life, and it would be all digitized, electronic digits in computers. You don't know where they are, you don't have control, and you can be locked out. So, and that's Klaus Schwab out of the World Economic Forum. So that is absolutely to be fought against.
100%. And I don't believe for a second that they're going to win. I don't believe that the call it the black hats or the white hats. So I don't believe the black hat is going to win. In fact, when if you go back to post 1194 on the boards, the question was posed: is the Federal Reserve ending? And the response was structure. So meaning that I have one of those little fur babies as well.
Yeah.
It's not bothering. I don't think it's bothering anybody. The Federal Reserve ending is not. It's not. I don't believe the Federal Reserve is going to end. I believe the structure of it, the nomenclature is going to stay the same, but how it functions on the back end is probably going to change. So I know that that's disconcerting for some to hear, but I think at the end of the day, what we want is we want change to the system for the good. We want the transparency. We want the openness. We want the level playing field, which are the buzzwords that the good reset uses. And if it's done within the confines of the shell or the name of the old system, if that it stays the same, but the complete structure of how it works on the inner workings of it is to what you and I want, then what really doesn't matter.
Well, for me, the Fed is basically.
I understand that.
Yeah,
I get that. I get that. But what I'm asking a theoretical question: if the structure, everything that you're talking about in Fed Ed here, if the structure of it behind the scenes was to our liking and what we wanted, and the power of the purse was put back into the people, but it still retained the name Federal Reserve, would you be okay with that?
You wouldn't
again, I'm asking a theoretical question.
No, I know, and I'm trying to answer.
Okay, get an answer.
When the structure changes as to who actually gets the benefit and the power to create and extinguish money and is returned to the people, the Fed goes away because it's not needed.
Okay.
It just goes away. There's no need to figure out its structure. It's just gone.
I understand what you're saying
Yeah.
in conceptually. I understand what you're saying, and I don't completely disagree.
Yeah.
But what I'm saying is I'm asking you a theoretical question.
Mhm.
I know you're saying it doesn't need to exist, but there's still going to need to be a Department of the Treasury for the United States. Would there not be?
Well, that's different than the Fed. Yes.
I get it. I get
Yeah.
it. But
The
I get, okay. So that's a perfect example. Let's say for the purposes of the conversation, what I'm saying is the Department of Treasury is renamed the Fed, and it has all the inner workings of everything. You get what I'm saying? I'm because
I'm trying to.
well, because some people are so tied up with the name Federal Reserve that they can't see the forest for the trees. What I'm saying is I don't really care what name is given when it's all said and done, as long as the functionality of the institution is to our liking. It does other things that you are talking about. We have transparency. We no longer have the banks creating the money. So all those things that you're talking about, I don't necessarily care the nomenclature of whatever the term is used to identify it, as long as the functionality is, like I said, to our liking.
If the function of the monetary system is to my liking, I don't care if you call things Bob, Jane, and Jill.
Okay, that's kind of where I was going, because I've received some pushback on that. People don't want to call it the Fed anymore. It's like, well, yeah, but you know what? It doesn't really matter what you want is going to be called. It's, it may still retain its name. It may not. I don't know. I'm just going by as I look at Post 1194. I when I see how they said it, how it's the structure of it is what's going to change. So,
well, the way I believe people are envisioning the structure is not the way I want the structure.
Well, and maybe not, but I don't think, but again, when the founding fathers were hashing out the Constitution, not everybody got everything they wanted, and you may not get everything that you want, but we may get into a system that it's not perfect. It does have flaws, but it could be the best system that everybody agrees to.
Well, the system that I envision at its core is a simple thing, very simple. You take the power to create and extinguish money away from banks. You put it into an entity that is owned, controlled, directed, monitored, reports to we the people. We the people own it. We the people control it. This is the sole source of funding to the federal government. Done. That's it.
Well, if you were my thinking for federal, my idealistic method of giving government, or giving funding the government, is through consumption tax exclusively. No more income tax, just straight consumption tax.
Well, the consumption / sales tax could be operational in the system I envision in this way, but the basics financing of the federal government comes from the system where the people control the creation of money. Now, let's say, and God forbid, to use an old event, we didn't have one, we had 3 Katrinas all at once. A lot of devastation. We need the federal government to step in and get some funding out there and help rebuild. Okay, fine. Federal government could request from the National Bank, the sole creator of money in our system, needs some extra funding. And on an approved emergency, it's done. Federal government spends the money. Now you've got a lot of extra money in circulation that you don't want to stay a long time, because that could help build inflation. How do you reduce the money supply back to the level of the economic activity? Consumption tax, sales tax. Could be different places at different rates. Once the money supply is in balance with the economic activity of the country, the tax goes away. Because the tax is not to quote unquote raise revenue. It's to simply adjust the money supply to where we need it. Also now I may have mentioned this before, when the sole creator of money is in essence the people through their one entity, and since basically people are the only ones that use money, not banks, not government, not the Fed, well, why aren't we the creators of money? And I kind of addressed that in module 1. Well, states or counties or cities could petition the national bank for some funding, for a loan at a very low interest rate, which means what? They don't have to go in the marketplace and borrow at a very high rate. But then again, they would be held accountable for how they spent that money. And if they did not spend the money as promised, they probably wouldn't get another loan, and the people in that state would understand why. That to me is where the people are in control of their money supply, and they will control it in the best possible way to eliminate inflation, or eliminate it or absolutely make it as little as possible. No federal government taxation in any way, because we're funding the federal government. And we don't like a bunch of entities, wasteful activities, it's not getting funded. And of course, no more borrowing. Because as our federal government has shown, it's like leaving the teenagers home alone for the weekend with the keys to the liquor cabinet, the Corvette, and the credit card. Okay, no, okay, if you are responsible, if you are truly responsible, if you truly care about the country, if you're truly understanding what you're doing and you're doing the right thing for the right reasons, do you help accumulate a $29 trillion national debt?
Nope.
No. And at the same time, while you're doing that, all the elected employees in DC, what else have you managed to do? You've managed to create what is affectionately referred to as the unfunded liabilities.
Has anybody ever gone and looked up what the unfunded liabilities are for the country?
Yes.
It is absolutely insane. Go do it. Do it. I'm going to do it right now.
Well, let me tell you what I learned some time ago. There's an economist out of Boston, Lawrence Kotlikoff, big time. And in 2012, he did a present value analysis of the unfunded liabilities, Social Security, Medicare, in 2012. I don't know what his discount rate was, but he did an analysis of the unfunded liabilities as of 2012. The number he came up with was that the unfunded liabilities, that means liabilities that are in essence on the books, but there's no money sitting, there's nothing sitting to pay them off. It was over $100 trillion. And that was 2012. This is what our elected employees have allowed to happen because they are teenagers left at home alone with the keys to the liquor cabinet, the Corvette, and the credit card. And we need to take the power back from them. And the power is funding. That's it.
Yeah, it's absolutely insane. The unfunded debts is $13,500 per adult. Which is that's I don't know, that doesn't seem right. I feel like it should be much more than that.
Well, I'll go with what Lawrence Kotlikoff said at over 100 trillion, and that's 2012.
Well, I'm looking at the USDebtClock.org.
Yeah, right.
And I'm looking at I've got the Treasury dollars, the M2 supply, the unfunded debt / interest. Oh, that's the interest. I'm sorry. National debt. Where I'm looking for the unfunded liabilities is where I was looking for. Where am I looking at? It's been so long since I actually looked at this thing. It's changed a little since the last time I saw it. Federal spending, now we're at 125.93% debt to GDP ratio. So we're over 100%. Yippee.
Hey, they know how to run a business, don't they?
Absolutely. You
And
know,
if,
I remember going back to the early 90s. I remember I voted for Ross Perot because he was a businessman and we needed a businessman to get in there and do it. Right. And then of course when Trump ran, I was like, yeah, we're gonna get a businessman in there to do it. And I think he did the one thing that I can see that he did where he took an active role in is I saw a difference in the post office. I saw a lot of things that they did that were, they cleaned up their act significantly because the post office has long been the post office and Amtrak have been the only two things that they've ever really used to try to, be profitable, and both are miserable failures. So, but anyway, on that note, Alan, thank you so much
thank you.
for these last 3 weeks. It's been
Well, I appreciate the opportunity to be
it's been
on.
very educational for me. I mean, I've learned quite a few new things. So
Please study Fed Ed, and as you want, just bring me questions, because if we don't change, if you don't fix the problem will fix you.
Yes.
And this problem is very, very fixable. The result is massive in that we, the people, actually control our money. We, the people.
Let me ask you a question, and I don't mean this to be a theoretical question, but I mean, but in order for what you are proposing to have an impact, doesn't everybody need to be on the same page at the same time?
I wouldn't say everybody, but
what would be the percentage of people that you would have to have on your, in your corner to make this so that it would be an effective mechanism?
I don't know who would deliberately push back. A lot of people might not just take interest, but what percent of people do we need to get DC to change? 10%, 20%? How many?
Well, I would make the argument that 3% is enough because it was 3% of the population that took up arms against the British in the Revolution. So I think 3% is definitely a tried and true number.
It's not I don't believe it's a huge percentage, but the thing is that who would push back and say, no, we can't change this. I want inflation. I want the federal government to tax me. And I want the federal government to continue to accumulate unpayable debt. Who's going to?
But say, okay, and not being combative here, but what you're talking about is sensible to you because you understand it.
Mm-hmm.
But you are relying on Joe and Susie's six pack to grasp what you do, and they don't. In fact, I would argue that the vast majority of people are just lazy, and they just know that, hey, I'm going to go to the bank, and hey, I include myself in there. I'm going to go to the bank and do whatever I need to do. I have learned over the last year or so. I've had a total new learning process of learning the financial system. I'm much more fluent in it now because I'm learning about crypto. And I'm very big in the digital asset market, so I've done well at that. And I'm learning things about banking because I believe that the new system that we're coming into is going to be using a blockchain as kind of a background, as a standard for transparency. It's kind of like the quote that I just read, that there's two competing resets going on. So is that the way it's going to be because I think so? I don't know. I have no idea. I just know that I want it to be something that's good for everybody, but I know that there's probably going to be some people who are not happy with it, and there's going to be people who love it. But all that said is I have learned a lot more this past year as a result of my interest in crypto and being my own personal bank and the decentralized finance application of the digital asset space. So, but that said, transitioning back into what you're doing here with Fed Ed, I learned a lot. I think the point I'm making, let me get back to the point I'm making, is I just don't know how many people we're going to need to rely on getting this thing to be where it needs to be, to follow your, like, I'm getting tongue tied here, to follow your example of how you want it to get fixed. I just don't, I don't know if that can happen at a speed fast enough that's going to overtake what the white hats are doing behind the scenes.
Well, for me, there's understanding let's say the intricacies of Fed Ed that, will take a few hours. There's then, okay, does anybody like inflation when you understand that inflation is loss of purchasing power, which means your dollar bought more yesterday than today, and your dollar today will buy more than will tomorrow. No one wants inflation. Okay?
Nobody wants inflation
Okay.
when they understand it.
Yeah. So second, would you like to never, ever have to file another 1040? Oh, yeah. Okay. We got that one.
You are aware, not on total side note, you are aware, did you ever see Aaron Russo's documentary, Freedom to Fascism?
Yeah.
You are aware that there were several members, there were several IRS agents who took up, there was a thing on there. It was like somebody was offering a $10,000 reward to show them the law that required the people to file a 1040, and there is no law.
No, I understand that. I understand that, but it's still out there, and people are still doing it
because out of fear, not out of a law. They're out of fear of what the government will do to you because we tolerate it.
Right, but wouldn't you like to not have to basically fight against fear, just have it go away? And the answer is yes.
Of course, yes, because that's the easy way out. Yes,
I mean,
everybody wants the easy way.
Well, it's that, okay, this problem doesn't exist, this problem doesn't exist, this problem doesn't exist. Would you like those, in the national debt? Wouldn't you like these problems to go away? Yes, absolutely. Okay, since we're all agreed, cat making me itch, since we're all agreed that these three major problems, which are directly tied to our current monetary system, is something we want to go away. Okay, now the person is available to have the conversation. And my experience in the live classes I've given, one just recently in Beaumont, California, the people were very interested. They asked great questions. And this is the beginning. This is not the end. This is the beginning of the need to study, to understand, and then, of course, heed the call to action. Because the other side of not taking action and stopping this is one world order. And that is total control and dominance, not liberty, freedom, and rights. So that's it.
I agree.
All
right, Alan. Well, hey, we will we'll see where we are when Doug is I'm sure we'll get into a period of lull where we can find an opportunity to bring you back and people can come on and ask more questions and be a little bit more, make it a little bit more interactive. So I'm sure that we can find some time in there, onesie twosies, where you can come in and just kind of pinch it for him on a week or something.
That would be wonderful. And I'll mention this, if it's of interest to you and or the listeners, I also speak on the climate issue.
Oh, really?
Oh, yeah.
And in what capacity? This is news to me.
Okay, well, people, when they first hear me or something, oh, you're one of those anti-climate change people, and you're
my new hero.
And I go, wait a minute, just wait a minute. Take a breath. Okay. Climate change, quote unquote, hear me out before there's a reaction. Climate change is real. It happens pretty much every day.
Yep.
And in the big scheme of things, depending on where you are in this country, you'll experience 4 different seasons.
Yeah.
And they're very distinct.
Exactly.
So that is normal. But to me, I'll tell you, this is my opinion. Climate change began right after Let There Be Light.
Exactly.
Okay. And most people, and I've asked this and they don't know, and this is not heavy study. If you really want to get into it, you talk to some geologists. That's where you get it. But do you know how many ice ages they've documented on this planet? Beautiful Mama Earth?
No.
Okay. We're in the 5th ice age.
Now?
Yeah, we're in the 5th ice age, as documented. There have been, what makes the 5th unique compared to the first 4 is that the first 4 ice ages, and this is going from Mama Earth being a snowball to a hothouse and everything in between on 4 big, massive time frames over billions of years. One thing in common: no human. Wait a minute, you can have climate change without humans? No way. Yeah. So you take that position, and then you come forward into this ice age, and you realize how long the ice age has been going on before humans, the first Homo sapien touchdown, based on archaeological studies. It's like 300,000 years ago. Out of South Africa, on and on and on. Well, there's all kinds of things that have happened on this planet in the last millions of years, hundreds of thousands of years, that are absolutely amazing, that affected the climate, that had nothing to do with humans.
Well, at the
So if you want to go into an hour of this, I can do it.
From a branding standpoint, and I don't know what this is a YouTube channel, so I don't know what I can and can't say when it comes to that, because I've never delved into it, but and I don't want to get this channel knocked down.
Neither do I.
But I will say that in reference to, nomenclature, again, words, when they use the term climate change, that actually that's not a lie. The climate does change, but what they the one they used to use was the global warming. But when you understand the communistic new world order tones of the powers that be, they are using the environment as a mechanism to halt industry, to halt forward progress. And that's what you really have to understand. And that's the whole origin of the tax credits and all the renewable energy. We already have so many technologies out there for free energy with Tesla stuff, and who knows I'm actually fairly hopeful that we will begin to see some of that technology released to the people. So
well, before we had climate change, I agree, we had global warming,
right?
And before we had global warming, if you're back in the mid to late 70s, we had the next coming ice age.
Mm-hmm.
Everyone has been blamed on CO2.
Yeah.
And if you look at what Gore predicted, the guy who invented the internet.
Yeah.
In 2000,
DARPA?
Yeah, in 2009, he said within the next 5 to 7 years, there's a 75% chance that all the ice would be out of the Arctic. Okay.
Mm.
They just measured the ice amount in the Arctic recently. It's the largest amount in the last 15 years.
Oh yeah, 100%. Well,
they've got ice. Yeah, go ahead.
These guys have the audacity to tell us that the ocean levels are going to rise in 10 feet and Florida is going to be underwater, and all the coastal lines are going to be underwater. And yet where are these very same people who are telling us the coastlines are going to be underwater by 30 feet? Where are they buying property? On the coast.
Well, to that point, a former president.
Yes. Bought an island.
Well, first of all, he bought a place on Martha's Vineyard.
Mm-hmm.
I understand Martha's Vineyard to be an island.
Mm-hmm.
he bought a mansion on the coastline of the island. Well, when you're a former president and you're privy to all the best information and you believe that, the ocean is just going to swell up, why would you buy a multi-million-dollar property on an island?
Makes no sense.
Next, he decided to go home and buy another multi-million-dollar mansion on the coast in Hawaii. But here's the kicker. About 4,500 to 6,000 years ago, a little before us, there was a forest on the coastline of Wales. It got buried, swamped. Recently, in the last few years, due to big storms, wave action, winds, the tops of this forest have become uncovered. And sticking out of the sand, one person described it as like shark fins. Wait a minute. I thought the ocean levels were rising. And now a forest that was buried 4,500 to 6,000 years ago is now being unveiled. How can that be if you have rising sea levels?
Correct. Exactly.
So
Well,
anyway,
we're way over time here today, boy. Woo!
Well, anyway, so
Fine.
that's a topic that we can go into if you want in depth.
Sure. People don't know this, but I was a meteorologist in the Navy. Not that has anything to do with climate change, but I understand weather a little bit more than most.
Good.
So anyway, all right, guys. That being said, just want to say, so we're going to sign off now. Hope you guys all enjoyed this with Alan. And again, next week we're going to be back with Mr. Constitution Douglas V. Gibbs, starting up with a new round of the Constitution class. So appreciate everybody for being here today and putting up with me being cantankerous and Alan. So thanks again to everybody for all your support, and we will see you next week.
Thank you, Ron. Take care.